No, the average person that doesn't really understand money does understand that their IRA is a bigger number, and they've trusted their wealth manager, really a stockbroker, to put them into some high-tech companies, maybe some consumables, et cetera, and they've balanced their portfolio and they've seen their IRA grow and grow and grow. And so, again, like their house price going up, they're of the belief that everything's fine. Look, I'm growing my money and I'm in good shape, not realizing that that money is actually a burning match. Yes, I feel like a broken record, Vlad, and I'm not ashamed to say it because I could be wrong for a long time and then all of a sudden I'm right. And I have said for very long that the global stock market, particularly the United States stock markets, are mispriced. They are overvalued on almost any metric that you want to use. They've been that way for a very, very long time. And I'm one of the few basically that said, we need to see a correction and we're going to see a correction. And I have modified that in the last year or more, saying that, and this one really disturbs me, but I will say it, I've said it in the past, it's a possibility that we won't see a correction in the stock market. It's a possibility that we will see our stock market, United States stock market, do what the Zimbabwe stock market does, do what the Turkey stock market does, do what the Argentine stock market does, which means it just goes up and up and up because the currency is being debased or devalued at such a significant rate that the citizenry and corporations and money managers pour money into the stock market and drive it higher and higher because they're escaping, to the best of their ability, the currency crisis, the currency destruction. And I, for quite some time, up in the last couple of years, believe that could absolutely not happen. I mean, like 100%. Now I'm not at 100%. There is I don't know what the percentage is. It's low. It's under 10%, under 5%. But that actually could take place in this country. So we could get to a point where the markets are in such disarray that one of the ways out of holding a depreciating currency is to put the stock market. So again, that's a possibility. I rule it as a small possibility, but it's there. I don't rule it out anymore. And further, that the best and most healthy thing is for the market, a really true free market, to reprice everything to what a free market would determine. In other words, if you're selling a software-driven company at 300 times earnings, or in some cases 1,000 times earnings, or in many cases no earnings, and they get these incredible valuations, common sense tells you something wrong, and common sense says it can't last forever. So I'm a little discouraged by the inability of the industrial average or the S&P 500 or any of the stock exchanges or indices to actually represent the true value of what's out there in the marketplace. It's distorted.
There is a disturbing scenario economists rarely discuss. Stock markets rising not because companies grow, but because the currency collapses. Countries like Zimbabwe, Argentina, and Turkey have experienced markets that climb relentlessly, even as citizens lose purchasing power daily. People invest simply to escape a currency falling in value. A small but growing concern is that the U.S. may not be fully immune. If inflation worsens and confidence erodes, investors could rush into stocks out of fear rather than optimism. When assets surge to avoid a sinking currency, it's a warning, not a victory.
The US dollar, depending on what metric you use, is worth about 2 cents, cent and a half, somewhere in that range from the 1913 dollar. And of course, it's happened so gradually that most people really don't pay a lot of attention to it. In fact, a lot of people are taught to believe that some inflation is good for the economy. It is not, but they believe it because their house price goes up and they think they're wealthier. Actually, they're not. All that's happened is the currency's been debased, it's been diluted by more currency in circulation, and yet they think that they're gaining because the price of their house has gone up. It's not true, but again, many people think that. So we are going to see a day of reckoning here, and the dollar is actually showing us, because it's depreciating at a faster rate than most Americans are used to. So now, instead of thinking, well, it's a good thing my house is worth more, it's like, wait a minute, my grocery bill is almost double what I used to get, 3 bags of groceries for $100. Now I'm lucky to get a bag and a half for $100. Now that it's hitting home in a more direct way because the rate of inflation, the rate of change has accelerated, people are waking up. They're saying, wait a minute, what's going on here? My salary is a bigger number than it's ever been before, yet I'm poorer than I was 5 years ago. Once that starts to take hold psychologically, people start talking about, people start acting on it, buying more groceries on sale or stocking up on something that they need in the future because they're afraid the price will be higher the next time they go to the marketplace or the next 3 to 6 months. That psychology is really hard to break. And that's what hasn't occurred yet in enough of a manner, in a big enough percentage to cause a big problem in the United States, but it's getting close. So all we need is, I don't know how many, I can't give you a number, but we just need a few more percentage, maybe 0.5%, 1%, 2%. It doesn't take a big percentage for people to start moving into anything outside of the US dollar to preserve their purchasing power. And once again, that takes hold, then you have an inflationary crack-up boom, as von Mises has stated, where people understand that their currency is losing value rapidly.
For decades, Americans were told a little inflation was harmless, even helpful. Home values rose, and many believed they were becoming wealthier. But now, groceries, rent, and essentials cost dramatically more, while wages lag behind. When a paycheck grows but buys less, the illusion of prosperity disappears. People begin stockpiling goods, chasing bargains, and fearing future prices. Inflation becomes a behavior, not just a statistic. Once this mindset spreads, it's difficult to reverse. A few more percentage points of the population losing faith in the dollar could trigger a widespread rush into alternative stores of value.
Yeah, gold is really kind of a policeman on the whole financial system. Gold doesn't change. We all know that. An ounce of gold, is an ounce of gold today, and 10 years from now it'll be an ounce of gold, but maybe 10 years from now the price will be 30,000 per ounce or something in US dollar terms. Gold hasn't changed. What has changed? The value of the currency has changed. And the value of the currency is changing as we speak. The only thing that would mitigate a further increase in the price of gold is a huge deflationary event where the amount of currency is cut by a large number, like 50% or something. And that actually could happen if we had really a free market in interest rates, the price of money. So for example, if what happened in 1980 under Volcker, where the interest rates were momentarily put above 20%, were to occur again, let's say go to 10% in today's environment, that would basically crash the bond market terribly. And if you had to mark to market and get your money out of your bond rather than getting that $1,000 face value that you're guaranteed at the bond expiry, and you had to cash it in early, that 10-year bond or 10-year note, you had to cash in at 5 years and you get half the money for it, that's highly deflationary. I don't think that's possible. The Fed knows it's not possible. The bankers know it's not possible because it would be such a disruption in the financial system. Basically, things would probably not function or not function very well. So what's the alternative? And that is to pretend everything's okay and keep inflating the money supply until the market itself takes over. And that's where you have, again, the crack-up boom. So Fed's between a rock and a hard place, as the expression goes. The easiest method is to let the currency fail and reset. And of course, not behind closed doors. It's pretty open if you know where to look, and I'm sure you're aware of it, Vlad. But The new system is already being instituted. It's been in China for quite some time. That's sort of the beta test for the global currency or new monetary system. And it'll be a digital system. And how they wipe out the debt, I'm not sure. A lot of people have talked about how to wipe it out. It could be swap for Bitcoin. It could be a cryptocurrency. It could be a cyber attack. It could be an EMP, either natural or created. There's a lot of things that could mess with the way the system runs, which is basically on a bunch of computers, and those get wiped out or dislodged or dislocated or hacked. And all of a sudden, the reset button has been pushed, more or less. And now they wouldn't necessarily even have to revalue the currency, but they could and say, look, we're so sorry you lost your bank account, but to the best of our ability, here's what you had. Here's the new digital equivalent. Just give us a digital ID and you're on your way.
Gold acts as a financial truth detector. Announced today is announced tomorrow. Only currencies change. That's why central banks across the globe are accumulating gold at record levels. They know trust in money is fading. The Federal Reserve faces a dilemma: raise interest rates sharply to restore credibility and risk a catastrophic bond collapse, or continue printing, letting inflation quietly destroy savings. Most signs point to the easy path: sacrifice the dollar rather than the system. History's pattern is clear. When paper loses trust, people turn to hard assets that cannot be printed.
Not that much. The early adopters, people that have followed my work, have been in for 20 years or 25 or 10 or 5. But no, the average person that doesn't really understand money does understand that their IRA is a bigger number, and they've trusted their wealth manager, really a stockbroker, to put them into some high-tech companies, maybe some consumables, et cetera, and they've balanced their portfolio and they've seen their IRA grow and grow and grow. And so, again, like their house price going up, they're of the belief that everything's fine. Look, I'm growing my money, I'm in good shape. Not realizing that money is actually a burning match. And at some point it's going to burn their fingers, because at some point it'll be worth zero. Now, I never ever said the US dollar will go to absolute zero. It won't. But since the 1913 dollar is only worth a couple pennies, how much further have we got to go? And how much longer can we go on this path of currency destruction before the system has to be reset, has to be revalued, has to do something? I mean, what does Argentina do? They renege, they fail to meet their contract. The bonds that people bought become worth zero, and they reset the currency and start over. And in Argentina, that's an event that takes place almost every 10 years. Now we have a global economy that's never happened with, based on the US dollar. We left the gold Bretton Woods system in 1971. It's been more than 50 years, and we're still hobbling along, pretending it's going to be okay, but it isn't. Are we going to be able to pull in Argentina? That would be very tough, because we're looking at what's the most sacrosanct investment of all time, purportedly, and that's the future value. I won't say value, the future belief or confidence in the US dollar being able to be worth something in the future. And we all know that's a lie. It's not true. And so that $1 that you have in your pocket today should be spent for something of substance now, rather than holding it for a T-bill or a T-note or a T-bond where you've got 6 months or 5 years, 10 years, 20 years, 30 years. Because if it's losing value rapidly now, why would you hold it any longer? Haven't hit that point yet, but that trend is very apparent. In fact, I've written about it or talked about it here very recently, about how few of our major purchasers on an international level are buying as much US debt as they did in the past. Japan isn't, China is not. Most of the major nation states are not. And what are they doing? They're buying gold. And they know gold is going to hold its value. It doesn't change, it just maintains. But they want to maintain what they have now rather than lose any further.
The world has long relied on the US dollar as the foundation of global finance. But that foundation has been weakening since the gold link was severed in 1971. As major nations reduce U.S. debt purchases and shift toward gold and alternative payment systems, a monetary reset becomes more imaginable. Digital currencies, already tested in China, could emerge as the next global standard. A cyber disruption, financial crisis, or debt failure could force a rapid transition. Citizens may wake up one day to find their accounts converted into a new system, whether they approve or not.
I think one of the keys will be how much press it gets in the mainstream. And the joke, but it's really not a joke, that the shoe shine boy is telling you, what gold stock to buy. And when you see those kind of indicators, that's a pretty reliable sign that we're getting near the top. The market's getting too frothy. The real problem or question becomes, okay, it is overvalued. What do I do with it? And, to each their own. I mean, there's not going to be one exact thing. Well, you buy, XYZ company, this new, I don't even know. I'm trying to think of something outside of AI, this quantum computing, whatever. And that won't be the answer either. You're going to need to look at what suits you and your family best. I think land is probably a pretty safe bet. It'd be either raw land or improved land. You want to look for something that's undervalued relative to gold, but if gold's overvalued relative to everything, then obviously you can buy stocks, you can buy real estate, you can buy a business, you could do whatever. If you're wealthy, you could start a foundation. You could, be a philanthropist and give money away. There's a lot of things you could do with it, but I haven't got a pat answer. But I really wouldn't want to take it and put it necessarily in a bank for currency for very long, because unless we know the value of the currency is stable, we really don't want to exchange gold for something else. But that doesn't mean you want to hold on past the overvalued, area either. So it's a challenge, but, people are smart. I mean, buying a business is probably the best thing. But then again, in this world with the constant rapid changes where with AI and robotics and displacing people, even, software engineers that used to be, excuse me, Vlad, software engineers that used to be like probably one of the best degrees you could get when I was in school. And I've been out of school for a long time, but those guys are getting replaced by AI that can write code better than they can. So it's a difficult one, but the basics stay there. I mean, the hardcore, there's machines that build 3D houses now. I mean, there's a lot of disruptions. So I'll just leave it at that. I will address it as that time approaches. I'm already looking at, the energy sector again, which I think is a good place outside of the precious metals, because the world runs on energy, and oil has been really, really creamed as of late. And yet the fracking lie is starting to become more and more apparent. That is not the answer. It was a temporary solution. It was a Band-Aid on a very big wound. And that Band-Aid is peeling off slowly, and sooner or later it's going to pop all the way off. And people will see that the wound really hasn't been healed. There is an energy problem ahead. So that's an area I'm studying a little more diligently right now.
Investors who feel secure watching asset values rise may be overlooking a critical truth. If the currency is deteriorating, the gains are an illusion. Wealth must shift toward what holds real utility: land, essential commodities, productive businesses, and energy resources. With rapid technological disruption and AI eliminating jobs once considered future-proof, stability is becoming scarce. Meanwhile, global energy supplies face long-term challenges, revealing vulnerabilities in modern infrastructure. The wise strategy is diversification rooted in resilience, not speculation. The next financial chapter will reward preparation and expose complacency.